Iridium's net income fell 55.9% last quarter, from $22 million to $9.7 million. Revenue in the same quarter went up. Subscribers grew 6%. Interest expense fell. Nothing in the satellite business broke. The company just spent the quarter selling itself. Here is the quarter ended June 30th. Revenue of $225.2 million, up 3.8%. Operating income of $34 million, down 32.3%. And net income of $9.7 million, down 55.9%. Revenue up, profit cut in half. So where did the money go? Selling, general and administrative expense. In the June quarter of 2024, it was $46.7 million. In 2025, $44.6 million. This year, $67 million. 2 flat years, then a 50% jump in a single quarter. The 10Q says why, and it does not hedge. $14.3 million of transaction costs, tied to the merger agreement with ElevenLabs and to the Aireon acquisition. That single item is most of the $22.4 million increase in overhead, and it is larger than the entire drop in operating income. Now split the decline above and below the operating line, because Iridium carries $1.77 billion of term debt, and that distinction matters. Operating income fell $16.3 million. Everything below the line, interest, tax, and equity method losses together, moved in Iridium's favor by $4 million. Net interest expense alone fell $3.5 million. This is not a leverage story, and it is not a depreciation story, and it is not a revenue story either. Same June quarter, 3 years running. $201.1 million in 2024, $216.9 million in 2025, $225.2 million this year. Services, equipment, and engineering work all grew. Underneath, the business did what it always does. Billable subscribers reached 2.627 million, up 144,000, or 6%. Commercial Internet of Things added 167,000. One catch worth knowing: government subscribers fell, but government service revenue rose, because the government airtime contract pays a flat $110.5 million a year, no matter how many users log on. Here is why the fees exist. On June 28th, Iridium agreed to be acquired by ElevenLabs. Each share converts into $27 in cash plus ElevenLabs stock. Inside the collar, written into the agreement, that stock leg is worth exactly $27, which makes the deal $54 a share. Closing is targeted for the middle of 2027. The deal also killed something. Iridium bought back $407.7 million of its own stock in 2024 and $186.5 million in 2025. In the first half of this year, zero. On the day it signed with ElevenLabs, the board terminated the repurchase program outright. So what is it worth? At $45.96 on July 27th, the market pays about 14.5 times last year's EBITDA. The deal is worth $53.78 at ElevenLabs price that same day, roughly 15% higher. Our own discounted cash flow, on the assumptions shown, puts the standalone business near $33 in the base case, in a range of $13 to $59. Implied value understated assumptions, not a price target. One open question the market seems to be ignoring: the government airtime contract that pays $110.5 million a year, about 13% of last year's revenue, expires in September 2026. That is 2 months away. The government can extend 6 months at the same rate, and Iridium expects a new contract by March 2027. As of this filing, no successor has been signed. This entire analysis was built using RoboSystems, a platform that gives you direct access to structured SEC filing data for every public company. Revenue, earnings, balance sheet, cash flow, segment breakdowns, all queryable, all from the original XBRL filings. If you want to do your own deep dives like this one, head to robosystems.ai, link in the description.